Hello, everybody. Over the last few days, I've taken a lot of calls around the rules on the coronavirus business interruption loan scheme, or CBILS, as we have become to know it. I'm going to go through three aspects of it. I'm going to give you the definitive guide of what's included as much as I possibly can, because some of the individual banks' lending criteria does vary. So I'll tell you what it is from the government's perspective. I'll reference the individual banks' lending criteria, and I'll finish with some other important notes as well. So what is it? Well, it's a variation of an existing scheme called the Enterprise Finance Guarantee Scheme. That guarantees 75% of borrowings by the government as well, and they've varied that. They varied it to include UK businesses that turn up to £45 million that want to borrow between £26,000 and £5 million. I'll refer to borrowings below £26,000 later in those other important notes. The terms that it's repayable over is 6 years for loans and asset finance, and up to 3 years for overdrafts and invoice finance or factoring. It's interest-free for the first 12 months because the government will pay the interest to the bank, and 80%, as everybody knows, is guaranteed by the bank. It's free of all application fees. The lenders who join the CBILS scheme are expected to meet those costs on your behalf. And the government stipulate that almost all borrowing up to £250,000 will qualify for the CBILS scheme and be guaranteed by the government. But for borrowing over £250,000, the lenders are expected to assess the borrower's availability or the borrower's other assets that may be available to provide credit. So they will look at the business and possibly even the owner-managers personally as well as to whether there's any security available on other assets. Some peace of mind for you, though, that won't include your principal private residence, your family home. The lender could actually accept an application form from you and choose to give you ordinary borrowings, ordinary bank borrowings without a CBILS scheme. And in fact, I took a call from a client this morning who had been turned down by a bank who shall remain anonymous, where he'd made an application to them, 2-year forecast, a narrative and some management information, and they turned him down on the basis that the business was already viable and didn't need the money. Curiously, that is one of the government's key criteria, in that what you must demonstrate in your application is that if it were not for the COVID-19 pandemic, your business would be considered viable, and that the borrowing will enable you to trade out any short-term cash flow shortfalls. So it's actually aimed at businesses that are viable but only have a short-term cash flow problem because of COVID. So I suspect that customer will probably go elsewhere. And there are some banks that are welcoming new customers to apply for COVID loans. Some banks are only dealing with existing customers. And on that note, which is one of the differences that we're finding between banks, I'll give you another half dozen examples of how when you go to your bank, you may get a different answer to somebody else that's spoken to a different bank. So first of all, some banks are offering capital repayment holidays for the first 6-12 months. Some are saying, no, you've got to pay the capital from day one, but actually they'll roll up all of the capital payments for the first 6-12 months and include them in the principal sum that they lend you. There are various types of finance that are available under the CBILS scheme: overdrafts, loans, invoice discounting, factoring, and asset finance. But some banks will only offer maybe a couple or even one. Perhaps they'll say, we're only doing loans. Some of them have got different loan criteria in terms of the level. Sometimes they use percentages of turnover. For example, one bank is lending up to 25% of turnover, or 2 times your annual wages bill, the higher of the two. If you've got an existing EFG loan, some banks will convert that into a CBIL loan for you as well. Some banks are only offering, as I said earlier, they're only offering loans to existing clients. They won't accept new applications, but some banks are actually welcoming new clients with open arms. And some banks are asking for asset debentures as well. So in addition to the CBIL loan scheme, they will say we want an all asset debenture of the assets of the business. Because although the government guarantees 80% of the loan, that's kind of a last port of call for them in recovering their money. If you default on the loan, they will come to you for the remaining repayments. They will pursue you for it. So other points of note: the application process differs between banks as well. For example, Lloyds Bank and NatWest have already got on their websites application forms for you to complete. Other banks are asking for an application on an email. Now, those applications, whether it's on a form or whether it's on an email to your bank manager, should contain all the following similar information: a 12-month cash flow forecast showing the deferment or loss of turnover, and then the recovery, and therefore the borrowing that you need. And that should be 12 months or ideally 24 months. You should provide them with your most recent management information as well. That will be the last set of financial statements filed at Companies House, and that's the full version, not your filleted or abbreviated version as we used to call them. And your monthly management accounts up to the most recent period. Ideally, that's going to be the 29th of February. You should include there as well a small narrative, a business plan explaining how you're going to spend the money and how the business is going to recover as well. I said earlier that the borrowing was available from £26,000 to £5 million. There is borrowing available under a similar guaranteed government scheme, but it's for startups, i.e. businesses that have been trading for up to 2 years. For those businesses, you should go to www.startuploans.co.uk. The scheme's going to be open for 6 months, but that, I would imagine, will be reviewed depending on how quickly we recover from the pandemic. The scheme is available to all businesses, in all business formats, should I say, so sole traders, partnerships, limited companies, LLPs. Broadly speaking, provided that 50% of their income is generated from trading activity, they can apply, therefore no investment income. And in reflection of the other government aid that's available, so the £10,000 and £25,000 rates, grants, the forgiveness of rates for the rest of the year, and the 80% salary guarantee, none of those prevent you from applying for this loan. But obviously the government are asking that you include the benefit of those within your cash flow forecasts and your application. So I'm going to post a note of all of these changes onto our new web page for COVID support on our website. And if any of you've got any questions that you'd like to raise with me directly, you can email me on john.oddy@ascentisllp.co.uk. I hope that's been useful to you.